I want to keep this very, very simple and basic. So, two things we're going to cover: how the market trends, what that generally looks like, and then support and resistance. And then I'm going to give you a task that you have to look at in TradingView of some sort. You're going to have to do it probably in TradingView because I'm not sure how Coinbase actually looks. You might be able to do it in Coinbase as well, but let's start with market structure. In an uptrend, the market doesn't just go up. That's not the way it generally goes. In an uptrend, what you'll end up finding is you'll find these highs, pullbacks, higher highs, pullbacks, higher highs, pullbacks. And this is generally how the market moves. You can see that simply here: high, pullback, high, pullback. And you could do this all day long on every single chart, every single whatever. And you can see that that's how it is. That's how it works. So markets trend. Markets, if you're in an uptrend, then you're going to want to be taking buys. If you're in a downtrend, you want to be taking sells. If there is no trend, then you probably want to stay out of it unless you're going to look for support and resistance. So let's move on to that. Support and resistance. There are many different words, definitions for support and resistance, and everyone has their own idea of what that looks like. So you need to find what makes sense to you. For me, it's just places that are obvious that prices failed for a resistance to go higher than, and for support failed to go lower than. So if I were to look here, I have these 3 points right here that let me know that when price came to this level here, for whatever reason, it could not get beyond it. There is a high probability, given the past results, that when price gets here again, it's likely to fall away. So that would be a resistance. Support is the other way, where it is bounced. It won't go any lower. So I don't have much like I did that one, but I do have this big one right here. So I have this big area right here where price came all the way down here and for whatever reason, completely bounced away from it. And if you extend this into the future, you see that price, when came back into here, bounced away from it, bounced away from it, bounced away from it, and is now finally way out in the way. So support and resistance is just you can call it whatever you want. You can call it supply and demand. You can call it a floor and a ceiling. It's just areas in the market that look obvious to you as areas where price is not able to break through for whatever reason. We don't even know the reason, whatever it is. So those are areas that we can look at. So now that we have these two types of areas to be looking at, you have a resistance ceiling, a support floor, whatever you want to call it, and then you have trending markets, where markets move up, pull back, move up, pull back, move up, pull back, and vice versa, all the way wherever they decide to go. So obviously support and resistance, pretty easy. When price comes to a resistance area, you're looking to sell in essence. Price comes to a support area, you're looking to buy. And so those are cut and dry. Trending markets, they more look like a zigzag motion of higher highs and higher lows as everything moves. Now, there are all sorts of different type of trending markets. We looked at one here, in which case this was a pretty cut and dry trending market. And the reason why I say it's cut and dry is because each impulse, each push that broke the previous high, when the pullback happened, it happened about half of that ultimate move. So when the pullback happened here, granted it's less, yeah, it's definitely less, but this one about half. And that's generally what I like to see. I like to see that when the market moves and to create this 1, 2, 3 move, this the start, the high, the higher low, then the higher high, and then what would be having the next, hopefully, is a higher low. That when these pullbacks happen, they happen generally around 50% of the retracement here, which also I love to have line up with the previous high. So those are just the cleanest. They look crystal clear. You have a level that price is respected for whatever reason. Doesn't matter whatever the reason is. It's not important why all of a sudden this is a resistance area. Maybe people are like, yeah, I want to sell it for whatever reason. It doesn't really matter. Maybe people who are in buys down here took profits, and that's what's causing the sell off. Who cares? Nobody really cares. Don't focus on that. It's really not that important. What is important is whether or not you can find a trading opportunity to get into. That's the important thing. Who cares what everybody else is doing? What can you do? So once this happens and price breaks above there, this is prime real estate for me to look for potential buying opportunities, and vice versa in a downtrend. Downtrends, same thing: a low, a higher low, a lower low, and then a lower high. Sorry, and I'm looking for the same exact thing. I'm looking for about 50% of the previous retracement, as well as somewhere in and around the area of the low that was created. And that's another thing you got to think about is these are areas that you're looking at. So when I talked about this support area that was here, as you can see, sometimes it didn't make it all the way into the support area. Sometimes it made it beyond the support area. Doesn't matter. It's just a general area that you're going to be able to look at and go, yeah, I expect price in this area to react in a positive and a buying type manner. And that's what I'm looking to capture and get into. So those are the two things that you're looking at, keeping in the back of your mind. What I would like for you to do, and here's your homework, is you need to find a particular time frame. On CoinEx, I'm not exactly sure how that would actually work. I haven't looked. On TradingView, if you have about a half an hour to sit and do nothing, then I want you to go to like the 5-minute chart. You have a half an hour, and I want you to look at the candle that is currently open or currently closed. Watch the candle that is currently open. When that candle closes, I want you, in your mind, to basically make a prediction on where you think the next candle is going to go. And then watch the candle as it starts to form. These candles don't just print just like this. They start off at a particular point in time when the previous candle closes, the next one opens at roughly that exact point. And then they do something. They do stuff before they end up closing. So the 5-minute chart, every candle represents 5 minutes. The 4-hour chart, every candle represents 4 minutes. You got it. So what I want you to do is see how a candle forms. There's 4 parts to a candle. You have the open of the candle, the close of the candle, the high of the candle, and the low of the candle. And so if we were to look at this candle right here that just closed at 5 o'clock today, depending on your color scheme, this might be a green candle. For me, it's white. This is just a bullish candle. It means that price opened down here, did all sorts of stuff before finally closing up here. It closed higher than it opened, and so it is bullish. Same thing with this one. This candle opened down here, did all sorts of stuff in between in the 5-minute time frame, and when it finally closed, it closed up here. This one's bearish. This one opened up here, did all sorts of stuff within a 5-minute time frame, and somehow closed down here. The key that I want you to pay attention to is what happens during that 5-minute time frame. If you have 30 minutes, this will give you at least 6 candles, 5 candles, depending on when in the 30 minutes you actually get on here, that you can sit and watch and possibly predict what the next candle is going to be, as well as see how a candle forms. I want you to be able to see that because that'll help you understand how the market moves. Because these movements on a lower time frame, like if we go to the 4-hour, and the same exact concept here, no matter which time frame you use, all it is that's price, the way that it's moved all throughout that time frame, and candles just break it up even more. So like the daily time frame is going to have 6 4-hour candles in it. So if I were to highlight this daily candle, it starts right there, and I go to the 4-hour time frame. Here's that line. You have 1, 2, 3, 4, 5, 6 candles. That is what makes up this entire daily candle. It opened here, it closed here. The high of the candle is, of course, the high, and the lower the candle is here. And if we jump out to the daily, that's exactly what it should look like. So the lower the candle's there. Open, close, high, and low. On the 1 hour time frame, same thing. There's going to be 24 of these because there's 24 hours in a day. Look at that. There's 24 candles, but it's the same daily. It opened up here, low is down here, closes up here, high is there. So all we're doing is we're just drilling down into a particular candle to see what actually happens. Now, by utilizing support and resistance, as well as the way a trend actually moves, you will be able to find opportunities to get into trades and manage them relatively easy. So if you have an hour, then you can probably do 15 minutes. You get 4 candles out of that, right? Or you can do it, the time frames that are on here are not hard coded. Like these are just the general time frames that a lot of people generally use. But for the exercise that I want you to do, if you only have like 45 minutes, I would like you to be able to sit for 45 minutes is a long time to sit, but I want to be able to have you watch candles form at least 5. I want you to watch at least 5. So if you got 45 minutes, then, go to the 9-minute chart. You just type in 9 on your keyboard and it'll pull up a 9-minute chart. And then every candle is 9 minutes. 5 of these is 45. Perfect. Great. So whatever you have time for, do it. If you only have 15 minutes, then go down to, let's see, another 5, go down to the 3-minute chart. Every candle is 3 minutes. You got 5 of those. So you'll be able to see how these candles actually form. Can't really go any lower, pretty much lower than 15 minutes, because anything after that and you sort of start losing. You go into the 10-second chart and, well, everything's choppy. So try to set aside at least 15 minutes to be able to watch how a candle forms, and then take some notes. Let me know what you tend to notice about how candles form. Take a note of how they open, and generally what happens when they open, and then what happens before they close or as they close. Take note of those things. Write them down. Try to find similarities and stuff. Those similarities are what going to help you be able to visualize some of the stuff you need to be able to see in order to take some of these trades. And so that's what you'll be doing. So I think that pretty much covers. If there's any questions, let me know. But other than that, that's pretty much it. You can, if things aren't clear, so talking about trend, if for some reason you look at this and you go, okay, yeah, I got that. That's clear. That's an uptrend. Gotcha. If you get to places like this and you're like, I don't know what this is, ignore it. Leave it alone. The other video, I said 3 trades: Solana, GBP USD, Euro USD. You have three pairs there. You should be able to, if one's not moving one way, you can also throw on GBP JPY. That's another one as well. It'll be a little bit different than the other ones. And technically USD CAD, which I'm trying to get you away from a pair that you don't have. Actually, Euro USD, GBP USD. So you got Euro and GBP and USD, but you don't have NZD. Do NZD CAD. So add NZD CAD to your list. Stay away from the CHFs, and then you can add another JPY pair somewhere. CAD JPY, Euro JPY, GBP. You can add a JPY pair if you want to. But really, those 4 should be more than enough for you to be able to find an actual good trending market and watch how a candle's formed. And that's it. That's all I want you to find is if the market looks like it's trending on whatever time frame you're able to get onto. So like if you, for some reason, were able to watch the 15-minute chart during this point in time, anytime after here, and you're like, okay, the market's going up. I've got 1, 2, 3, 4, 5 consecutive bullish candles. Market's going up. I'm going to expect that the next candle is going to go up as well. And so you have your 3-minute candles here. And so candles open. It's like, okay, well, I expect the next candle to go down. It does a little, as you watch it, you'll see it does go down, but then it goes back up. Okay, I expect the next candle, based upon everything else, to go up. Okay, it does. How does it actually start forming though? Okay, next candle also go up. Okay, cool. How does it start forming? Next candle also go up. Okay, how does it start forming? And then you do that for 15 minutes. And then you'll be done. And take notes. Really let the price action sink in. Let the movement of price sink in, to show you particular things. And then pay attention how price actually moves, and then pay attention to how the actual candle closes. So that should be everything. Good luck.